Here is your new Skybay Sunday briefing for the week ahead in markets. Please know that I'll be posting videos just like this every single Sunday, briefing you for what to expect in economics and markets in the week ahead, alongside debrief videos every single Saturday. If this is something you think you could take value from, please consider subscribing. So this week we have coming up, we get some huge inflation data out of America. This will be an incredibly high impact, and I'll explain what effect it will have on markets later on in this video. So we have US PPI on Wednesday, US CPI on Thursday, and we also get UK GDP readings. These data points will have some serious impact on markets if they come in either side of expectations. So this will be incredibly important data to watch for in the week ahead. So what I'm going to do now, I'm just going to go through the economic timetable we have coming up this week, and then I'm going to go over the charts, summarize what influence it will have looking forwards on the markets. So to start the week, on Monday, we get 3 Fed speakers. These won't move markets too dramatically, but they are important because Federal Reserve officials do obviously signal their outlook through these speeches. Same again on Tuesday, we have Bostic, Waller, Kashkari, Daly. These are some big names. These are FOMC members signaling their sentiment towards markets and economic developments through these speeches. On Wednesday, this is when we start getting the really important data. Starting off 1:30 p.m. here in the UK, that's 8:30 a.m. Eastern time in America. We get the PPI reading for September. Here's what we've been seeing in PPI. So a little bit of deflation, but on the whole, slightly trending up the last few readings you can see here. And this really is not what you want to see. You want to see producer price index. You want to see the producer price index falling. These PPI readings have been going up. So this is the producer price index, by the way. So this is supply side inflation in the US economy. What are the prices for businesses and manufacturers? Are they going up or down? And since the last few readings, they've been trending up. And what we're expecting to see, so what economists expect to see on Wednesday, is this PPI figure to come in way softer than the previous 0.7. So to go back to the graph, they're basically thinking that PPI is going to come in at 0.3 or 0.5. So way back down to where it was in the reading before last, down here. And obviously the lower the better when it comes to inflation. So this PPI reading and the core reading here, this will be important data, but it's nowhere near as the CPI reading we get the day after. What we get at 7 p.m, so 2 p.m. Eastern, we get the FOMC minutes. And if you don't know what minutes are, it's essentially when someone sits down in a meeting and takes notes. So these are notes from the FOMC meeting. So this is important, engaging insight. Okay, what were the Fed officials debating? What were they talking about? It gives us a glance of what the Fed is expecting and what they actually said at their meeting back in September. So this is always important because it gives us a look at what the Fed is thinking, what they were talking about at their previous meeting. Moving on Thursday, this is when we start getting the big data this week. Starting at 7 a.m. here in the UK. I think that's 2 a.m. in America, Eastern time. We get this GDP reading. And this is just absolutely crucial data for the UK outlook right now. And we're expecting to see it come in at 0.2 or about 0.1, so just about turning positive. Here is what we're looking at when it comes to these GDP readings. So very much the concern with the UK and UK markets right now, we're seeing inflation finally come back down from the extraordinary highs we had a few months ago. But the concern is this inflation coming down because supply chains are easing and the interest rates are slowly working through the financial system? Or is inflation coming down because the economy is heading towards recession? So this GDP reading in the UK is hotly hotly anticipated to give us some insight into how the UK is performing in terms of its growth prospects. So this will have a huge influence on markets. I'll get into that in a bit. But here's what we've seen over the last few readings. Some down numbers, but mostly to the upside in very, very small ways. And what we're expecting to see in this GDP reading, we're expecting to see a growth of around 0.2 or 0.1%, right? So not blockbuster figures, not what you would expect, but economists are expecting the UK economy to stay positive, or in terms of its gross domestic product in August, to stay positive. All right, not by a lot, but anything that isn't contraction is what economists are expecting. And equally important to that, we have the 3-month average. So here's how the UK is looking over the sort of quarterly average of these GDP readings. And you can see it's a bit more optimistic. I wouldn't say it's anything spectacular, but it's definitely better. It's definitely in the green, as you would say. It's positive, it's growing. We're not seeing recession on these 3-month averages. So these two readings that come in here, the GDP month on month and the 3-month average, this will be absolutely catastrophic if it comes in negative, because markets will start pricing in UK recession likelihoods coming into the market expectations. We get industrial production and goods trade balance alongside this. This will be good business and industry data, but the big one is this GDP reading. And then later on Thursday, so 1:30 p.m. here in the UK, and I think again 8:30 a.m. Eastern time in America, we get the big all-important CPI and core CPI readings. And this inflation data every single month is, alongside the non-farm payrolls, definitely one of the biggest data points we get every single month for the US outlook, because it's the first inflation reading we get every single month from the US government. It's the first glance markets get on the inflation outlook, therefore it has the biggest impact. So this will be incredibly important to tune in for. The headline inflation rate year on year and month on month, and then the core inflation rate year on year and month on month. These are incredibly important data points. They will have an enormous influence on US markets and in turn global markets, because they'll seriously impact the Federal Reserve expectations. So what we're hoping to see on this headline year on year figure, we're hoping to see it's essentially same as last month's reading. All right, and here's the outlook we're getting at the moment across the year, so the last 12 readings. We've seen since end of last year, this headline CPI number has just been steadily coming down and down and down. And we had that great reading back in July, which I believe was the June reading, which came in at 3%. So touching close to that 2% target the Fed wants to see. But since then, we've seen inflation tick back up with these last two readings. So it went from 3% back up to 3.2. Last month's was 3.7 on the back of high fuel costs. Mostly energy inflation, mostly energy went into pushing this back up. And you can see that by checking it with the core CPI readings. So the core dropped, although headline increased on the year-on-year reading last month. And this is the outlook for core inflation. So this is excluding food and energy, I believe. But this targets more so what the Federal Reserve can control. So the Fed can't really do too much with regards to the price of oil and the price of fuel, but the monetary policy does, or should, I should say, influence some of the domestic inflationary pressures. So the Fed is still happy about this core reading coming down, and this is what we've seen, just a steady decrease coming down. This is what we like. This is great news for the US. And here's what we're expecting on this core CPI year-on-year measure. We're expecting it to decline even further, down to 4.1. So both consensus and forecast is down at 4.1. So i.e. economists are expecting, and therefore markets are pricing, a further decline in this core CPI reading down towards 4%. That would be great news. Obviously, even lower, even better. Early Friday here in the UK, we get some key economic data coming out of China. We get the monthly inflation readings, so that's CPI and PPI, and then we also get the balance of trade. China is, of course, an enormously important economy for the global economy, so this data will influence the outlook for the global economy. Then after that, on Friday, we get some industrial production figures for the Eurozone, alongside export and import prices in the US. The last big data point on the calendar this week coming up is this UOM consumer sentiment, so the University of Michigan's consumer sentiment. And this is the preliminary reading, which is released first. There's also a revision and then a final reading later in the month, but this is always the one to watch because this gives markets the broad expectation of what consumers are thinking and how their sentiment is gauging through this incredibly important UOM consumer sentiment figure. And here's what we've seen over the last few readings. Trending up. You can see US hit a high in consumer sentiment back in the summer, and it's been trending down ever so slightly, but it's still nice. It's still going up. All right, these are good readings. They're not ideal. To put it in perspective, here's what we've seen across the 5-year. But you can see since this 2002 bottom, it's slowly trending back up again, and that's good. Obviously, you would prefer to see it up towards the 100 level, but the fact that it's trending up is good news for the US economy. The question is, as consumers, in economic terms, consumers are essentially people buying things in the market. The consumers are considered the backbone of the US economy, and so as long as their sentiment is going up, that bolsters the case that the US economy still has strength. So that was a brief glance at the economic calendar of what's scheduled for this week coming up, starting Monday the 9th of October 2023. The big data, the big data, is that US CPI and core CPI readings that we'll be getting on Thursday. For the UK, it will be that huge GDP reading. So I'm just going to take you across to my screens now and show you the market analysis of what will happen depending on what data comes out, and either side of expectations, what's likely to happen, and what to watch for in markets. Okay, so the first thing I want to talk about is the US stock market outlook. And if you haven't watched yesterday's video, please do so now, or after this video I should say, because it will bring you up to speed on what the US equity market is looking like and how it was influenced by last week's economic data and market events. But here's what we're seeing on the 3-month view on US equities right now. As I said, please watch yesterday's video to get you up to speed on it in a more comprehensive way. I'll explain why stocks are slightly down right now. But what you need to understand is that if this US inflation data, so the PPI, the CPI readings, if those data points come in softer, i.e. lower, we're going to see a boost in US equities. Stocks will be going up if this US inflation data comes in soft this week. So on Thursday, expect big moves, and Wednesday as well, in fact, if the PPI readings come in significantly out of expectations. But CPI is the big one. Consumer Price Index, core CPI and headline CPI. Stocks are set for a big boost if that inflation comes in soft, because what it will mean is that the Federal Reserve is seeing inflation come down, ergo will not need to keep their interest rates as high for as long. So the more inflation comes down, the more stocks will be going up, because it's good news for the stock market when inflation is low, as the Federal Reserve won't need to be as hawkish in its monetary policy stance. So here's the Nasdaq year-to-date view. We saw a huge bull run in the technology sector this year, all for the first half of this year. Even when banks were failing, the Nasdaq was pretty comfortably just cruising higher. Then about midway through the year, towards the end of May, I believe, we had that huge AI report from Nvidia. Enormous AI bull market came through as investors were getting hopeful about the prospects of AI. But since then, the Nasdaq has been trending a little bit lower as markets and stock markets in particular are a little bit cautious about the Fed's monetary outlook. Same for the Dow Jones. Here we are, year-to-date view. Absolutely hammered when the banks were failing earlier in the year, trending up again on the back of hopeful, dovish expectations, and since August, been joining the other equity benchmarks on the way down. So here's what you need to expect from the US stock market this week. If inflation comes in low, it's going to be great news for stocks. If it comes in hot, it means the Federal Reserve is more likely to be more hawkish and for longer, which would be absolutely awful news for the equity market, i.e. stocks. So if it comes in low, if the US inflation readings come in low, great news for stocks. If it comes in hot, so high, this is bad news for stocks. Okay, and moving on to the bond market, here's what we've seen the last 3 months. And again, if you haven't watched yesterday's video, please watch it. I debrief what is happening here comprehensively and get you up to speed entirely. We've seen an enormous bull run, and this is on the back of hawkish Fed expectations and sustained, surprising US economic strength, which is bolstering even more Fed hawkishness, pushing up bond yields, sending down bond prices. And so if this inflation data, so that if the US CPI, PPI readings we get this week, if they come in soft, you can expect a little bit of weakness in this bull run of the Treasury yields. So soft inflation is bad news for these bond yields, as it means the Fed is less likely to stay as hawkish as previously expected. And of course, alternatively, if the inflation readings come in hot, you can expect these to go even further, because it just bolsters the case that the Federal Reserve is going to be doing far more monetary tightening over the next few years. And by the way, guys, if you don't know what any of these terms mean, please watch the video I posted last Wednesday where I explain what all of these words mean, what all of these markets mean. I go through it all on my Introduction to Financial Markets playlist, so watch that if you haven't already. But here's what you can expect from Treasuries next week. If it comes in soft, if the inflation report comes in soft, these will find a bit of a hindrance on these upwards moves. But if they come in hot, so high inflation, these bond yields are going to keep climbing, because it means the Fed is going to stay hotter, and it means the US economy is stronger than previously thought. Okay, so moving on to the FX market, here's what we've seen in the dollar the last 3 months. Same as bond yields have been soaring, the dollar's been climbing as well, the last 3 months at least. Here's the year-to-date view. Trending down, been fighting to get back down all year. And then these GDP readings we've been getting the last few weeks, the last few FOMC SEPs that have been released, showing Fed hawkishness likely to continue. The dollar's just been on an absolute tear up the last few months. And so this inflation data is going to be absolutely crucial in gauging what's going to be happening with the dollar in the next few weeks and months. So if soft data comes in, again, it means the Fed is less likely to hike and stay hawkish. If it comes in really, really soft, you're going to see some weakness in the dollar. If it stays hot, we may see some sustained up moves in the dollar as markets finally catch on to what the Fed has been saying the last few, at this point, nearly a year. They see interest rates being higher for longer, and this might push the dollar back up even further than it's currently trending right now. So this inflation data is absolutely key for stocks, it's absolutely key for bonds, and yes, it's absolutely key for the FX outlook as well. Definitely tune in for it. So if you liked this video, please like this video, please consider subscribing. And for a more fundamental catch up of what's been happening the last few weeks, please watch my other debrief videos where I lay out an analysis of what happened in the week just been. Good luck.